Hello and welcome. Today we shall be taking a look at infection and contamination control company Tristel PLC. The company has a market capital of £113 million and is currently ranked 169th in the UK FTSE Alternative Investment Market Index. In the financial year to June 2018, Tristel had a turnover of £22.2 million and an operating profit before tax of £4 million, which gave it a margin of 18%. It currently pays an annual dividend yield of 1.79%, which is paid semi-annually in April and December. This dividend is currently covered 2 times by earnings per share. The company was founded in October 1993 and is based in Snailwell in Cambridgeshire. The current CEO, Paul Swinney, co-founded the business and has been chief executive and a shareholder since inception. Tristel manufacture and sell products and systems addressing infection and contamination control in human and animal healthcare, pharmaceutical and personal care manufacturing plants, and industrial water systems. The company has subsidiaries in Germany, Poland, Switzerland, Russia, Hong Kong, China, Australia, New Zealand, Japan, and the USA, an associated company in Italy, and sells its products via distributors in more than 30 other countries. Tristel's regulatory programme succeeded in attaining 43 approvals for 16 products in 20 countries during the previous year. Hospital infection prevention via the Tristel brand accounted for 89.4% of annual revenue. Control of contamination in critical environments via the Tristel brand, 6.4% of revenue. Veterinary practice infection prevention via the Anistil brand, 4.2% of revenue. For the previous 5 years, Tristel has had a constant revenue of between £13 million and £22 million and an operating profit margin ranging from 13.5% to 19.6%, which gave it an average of 16.6%. The forecast for next year is a revenue of around £25.5 million and a margin of 21%. With generated earnings for the previous 5 years of between 3.2 pence and 9.1 pence per share, the dividend has always been well covered by at least 1.5 times the earnings per share. Tristel has a share price beta the same volatility as a FTSE AIM. The share price standard deviation for 2018 was 28 compared to 51 for the FTSE AIM. The current share price is 32.3% above the 52-week intraday low. At the end of April 2018, Tristel received its first approval from United States Environmental Protection Agency and registered its first foam-based chlorine dioxide product, Duo. This registration enabled Tristel to market Duo in the largest healthcare market in the world. In July, Tristel announced strong growth across the business, a cash balance of £6.7 million, and the company had no debt. The results announced in October stated that while sales growth was at the lower end of the target range, adjusted pre-tax profit and net margin exceeded both market expectations. In November, Tristel announced the acquisition of distributor Ecomed Group in Belgium, the Netherlands, Luxembourg and France. £3.4 million is payable in cash and £1.6 million from the issue of new ordinary shares. It was also announced that Paul Barnes will be interim non-executive chairman and replacement will be found before the next AGM for chairman and co-founder Francisco Sola, who will retire after 25 years in service. The interim results shall be announced the 25th of February. With products starting to gain approval in the United States, worldwide distribution in place, and with 250 patents in 36 countries providing legal product protection, Tristel appears to be well placed for future growth. The share price has fallen recently, but the potential growth is still reflected in the earnings price ratio of 28 compared to the FTSE AIM average of 30.4. Tristel pays a dividend yield of 1.79% compared to the FTSE AIM average of 1.46%, and it is covered 2 times by earnings. The revenues from overseas now account for 51%, and over 95% of the revenues are from repeat consumable products. For these reasons, I've given Tristel an overall rating of 4 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.